Okay, hello and good morning, everyone. Good morning. Welcome to Easy Markets Daily Pitch International with me, Darius Anucauskas. Today's the 2nd of January, 2024. So yeah, welcome everyone. Welcome to this Tuesday's morning session, right? So yep, where we're gonna have a very quick look at the markets, a few of the charts, the usual stuff, guys. But before we do that, as always, we always go through our risk disclaimer. So yep, but basically before we jump into the risk disclaimer, first of all, I want to say happy new year to everyone, because I mean, I hope you all had a fantastic break. I hope you all are feeling nice and refreshed. Sorry for my voice today a little bit. It's a little bit cranky, so I mean, I have a bit of a cold. So so yeah, guys, hopefully it's not gonna disturb. I have this like very nice, deep voice right now. Well, hopefully it's gonna work better for the video, for the webinar. Now, look, before we go further, I mean, I hope, like I said, I hope you had a great celebration. If you were celebrating, I mean, so it's a new year now. Yes, I mean, as everybody understands, everybody knows. But look, this year, let's see what's gonna happen this year. I mean, in general, it could be quite an interesting one, an exciting one. So of course, we'll have a look at the charts and we'll have a look at the other stuff. But also just to mention something, because we this year we will try to do a few other things here with easy markets, and one of the shows which is going to be upcoming, and that's going to be with one of our um, or not one of our, but actually one of the also webinar presenters here in TradingView, and we'll do a joint session together. So it will be on the 9th of January. So yep, this is the session we'll have with Jin Dao Tai. He's quite popular here on TradingView as well. So we'll have a joint session together on the 9th. So please tune in, or at least you can have a look at the recorded session later on, when it's going to be released. But just to let you know that something like this is coming up. So yep, hopefully you will like it, you will enjoy it. Something a little bit new. So yeah, I think it was going to be very exciting. Jin Dao is a fantastic person. I mean, he's quite experienced, so I think you will enjoy the show. So but more details about that later on during my other sessions. So yeah, guys, before we start looking at the charts, the usual, we need to quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'll disappear from that little left corner and I'll be back in a bit. Okay, so now then, guys, also, before we jump into the charts, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us. If you have any questions, you can always, reach out to us. So, guys, let's have a look at what's happening here with the futures, the Dow. Or actually, no, you know what? Where's my Nikkei? I need Nikkei first. Let me just double check that one. Where did I put Nikkei? Disappeared somewhere. Ah, it's here. Just a second. Where I cannot see it. There we go. There we go. So Nikkei, as always, I start off with Nikkei. Nikkei, look, we kicked off the year not on a very pleasant note. I mean, especially with the news coming out from Japan, where the earthquake has struck. So yes, not the most exciting start of the year, to be honest. So looking at the picture here, I mean, we're seeing that Nikkei did decline a little bit. however, not significantly. I think it's still subject to what's happening in the global market. So maybe, yeah, we'll see. We're seeing some negativity. However, let's be careful. Let's not rush into anything yet, because at the moment, I would say yes, the negativity surrounding what's happening with the earthquake consequences. I mean, right now in Japan, yes, it is sad, it is very sad, and I hope the country will, recover. I mean, well, we've seen in the past that the country does recover quite quickly, so it seems like they are used to it. So, I mean, it's a bad thing to get used to. However, that, well, I mean, the moment, I think they're doing a good job in there. So, look, another thing from the market perspective, sometimes when natural disasters happen, sometimes it's actually good for the stock market, and the reason for that is that there is demand for, let's say, construction equipment, construction materials, and building materials. So basically, you need to rebuild roads and stuff and other stuff. So you get an increase in demand for certain sectors, in certain sectors, and for certain companies in certain sectors. There we go. That's be the better option to say. So you basically, you see, like, the stock market can pick up the pace after a natural disaster has struck. So in this case, the fact that the US indices are still not giving up, and they're still, I don't know, they're still moving further north, and this one, Nikkei here, could also pick up, could also go back to the upside. However, for me, from the technical perspective, I said it before in, well, last year. I can say it now. Like I said it last year. Said that I need to see a pop above this 33,868 territory in order for me to get a little bit more comfortable with the upside. For the downside, I need to see a drop below this 33,200 zone, and then yes, we will take it from there. So, long story short, guys, for now, that's the game plan on Nikkei. Let's see if we're gonna get a breakthrough one of these areas which I've highlighted. Oh, excuse me for my voice today, guys. If you're just tuning in, I kind of already mentioned that my voice today is not gonna, well, is gonna be nice and deep because I have a bit of a cold. So apologies for that, and also apologies for me sipping tea. Yeah. So coming back to this situation here, look, China. So China opened up. I mean, it released this morning. It released the Tianjin manufacturing PMI number, which came out better than the forecast, and not to mention the forecast, but also better than the previous number, because the previous number was a little bit bigger or higher than the forecast. So it came out still basically in expansionary territory. However, as we can see that it did not really work well with the China 50 index here, and we drifted nicely to the downside. However, I said it before, and I'll say it again. Look, I'll start looking at some lower levels, maybe from around here, from around this 11,275. And if that gets cleared, yes, we could see a move towards the 11,158 territory, the one that I talked about previously. However, that gets cleared, certainly, yes, it could open the door towards lower levels. A break below the 10,985 territory right here, which is the lowest point of December. If we get that, then it would confirm a forthcoming lower low, attracting more sellers into the game. Let's jump into ASX 200. So there we go. We continue to push higher, and look, we've cleared that again. Cleared and jumped above that 7,600 territory. So we're basically in uncharted territory. Look, I will continue targeting the upside as long as we remain above the 7,600 territory. If we start drifting back down, and then we end up breaking this upside line drawn from the low of the 16th of December, then I will consider a bit of a move here to the downside, and then we'll take it from there, guys. So long story short, yes, ASX 200 seems to be like also one of those animals that cannot be tamed. Yep, at the moment it's just kind of, yeah, it's just one-way traffic. Dow Jones Industrial Average. So the futures here now. Looking, oh, by the way, before I go further, good morning, everyone. Yep, good morning, everyone in the chat room. Happy New Year. Happy New Year. So, guys, yes. Look, I hope, like I said, I hope you all had a fantastic, time. I hope you're all feeling nice and refreshed. So, look, if you are looking at some higher levels on the Dow, and I will probably repeat my sorry, I got distracted with something, but look, I'll repeat my scenario that I've said to you last year in December. Sounds like very, very far away. Now, I said to you, look, we could be seeing here a possible kind of Fibonacci here. I mean, we could draw this one eventually. However, we still don't have a peak. We still don't have that that top area from where to draw that. So that's why I had the courtesy to kind of maybe try to and assume here. And look, if, for example, this hurdle here, the highest point, the previous highest point, the previous all-time high, well, which was reached back in, or let's put it this way, the highest point of 2022. If, let's say, the market does like symbolism and stuff like that, like, nice, beautiful levels, then the 23.6 could align itself with this little hurdle. Now, in that case, we could see a further move north, and in that case, in order to align with this level, I mean, I'm talking about the 23.6, we still need to go towards the 38,190 zone, approximately around here. That's on the futures, guys. So yep, there is still room basically for some higher levels. Certainly everybody's talking about that psychological 40,000 mark. Now, look, I get it. It's a good potential target. However, let's, not rush into things, because in general, we still need a correction, because this is just madness. I mean, this is just it. We didn't see like a decent correction yet, so I don't know who's buying stocks at these levels, but yeah, it's a little bit tricky, when the stock market is like at these highs, and it's really, really becoming tricky to even consider and like invest into stocks. So, I mean, okay, that's why probably, we have Bitcoin surging, but I'll get to Bitcoin in a bit. Now, coming back to this situation here, look, for now, that's my game plan. If we somehow stay above the 38,049 zone right here, which I've marked, and this is the Fibonacci extension here on my chart, and if we do kind of stay above this little hurdle, or should I say not the 49, the 38,031 zone, if we stay above it, then yes, great. I will continue targeting towards my aiming towards my 38,190 zone. Excuse me, guys. So yep. Now then, the S&P 500. So we did push above the 4,830 zone. Okay, that's fine. But we failed to remain above it, so we were drifted back down. However, look, I said to you last week, actually, last year, I said to you that I need to see a drop, and I need to see the body of the daily candle staying below the 4,808 zone right here in order to go lower. Now, did we get a drop? Yes. Did we stay below it? No. So that means we're back to the drawing board, and now we're basically trying to find a place where, from where we could see, let's say, or consider some higher levels or something like that. So I'm just trying to mark the all-time high. That's Thursday. Yep. Let me just double check. 40. There we go. Yes, the 48 4,841 level, approximately around here. So in order for me to go higher, in order to go further north, I need to see a pop above that. At this point, guys, it is very difficult because, like I said, we are at all-time highs, and a decent correction is needed still, so we're not getting it. And look, this week, from in terms of economic data, we do get today the S&P Global U.S. Manufacturing PMI number, which is coming out, yep, later on today, just like I think like 15 minutes after the U.S. market opens up. Also, ISM manufacturing PMI numbers are coming out on Wednesday, so keep your eyes on that. Thursday will be a day. I'm talking about the U.S. data for now. Thursday will be the ADP number, which will be coming out on Thursday. Normally, it comes out on Wednesday, but because because of the holiday, we kind of shifted a little bit. And of course, Friday will be the more interesting day. That's going to be non-farm payrolls in the U.S. So the NFPs are expected to come out lower than the previous number. Of course, let's see how what's gonna happen. But if, let's say, the number comes out lower than the forecast, then maybe this is where the moment it will be actually good news is good news and bad news is bad news, and then maybe this way this would affect the could affect the stock market, and basically showing that there's not much growth in the economy. So now I think that everybody's focused on the three rate cuts this year, by mid this year. So from the Fed, I'm talking about. So everybody is focused on that. However, I already gave you different scenarios. We talked about that. So let's see if the NFPs could maybe force the stock market to go a little bit to the downside. However, you have to kind of be very careful and cautious on this one, because look, we have ISM numbers, right? So which are coming out on Wednesday. So ISM is the very important, which is tomorrow, basically. So ISM manufacturing number. So those are currently in contraction territory. If those continued, let's say, if those come out in contraction again, or let's say below 50, yes, I mean, this might not work very well with the stock market. However, if, let's say, then this is where the indices could fall a little bit, and then let's say if NFP comes out higher than the forecast, then we could see like the stock market maybe picking up the pace again and flying higher. So that's the scenario in my head. Again, let's wait and see. Let's not rush into things. I strongly recommend to wait for the data to come out and then do something about it. Just bear with me one moment, guys. I need to clear up my throat a little bit, and I'll be right back. Okay, I am back. Sorry for this, guys, because yeah, my I think my little cold is kicking in a little bit. So now Nasdaq. Let's jump into that one. Nasdaq. So look, I've drawn this idea of a potential head and shoulders pattern, and I'm still gonna keep it on the chart, to be honest. So look, I like this idea. Eventually maybe it will work out. We have a possible left shoulder here. This is the head right now forming, and maybe we will drift back down, find support near this territory somewhere, and then rebound back up, form the right shoulder, and then we could see a drift lower. So maybe that's going to be closer to the end of the year, something like that. So at the beginning of this year, we're already thinking about the end of this year. So but yeah, look, if you're really interested in higher levels on this one, and look, I don't blame you, there still could be some, in that case you need to wait for a pop above the current all-time high, which is above the which is around the 17,165 territory. Now, if that gets cleared, yes, a forthcoming higher high will be confirmed, potentially attracting more buyers into the game. Oop, didn't move that one. I wanted to move the arrow here. So, but in terms of the downside, look, a drop below the 16,918 zone right here could do the trick, and we could start seeing some moves lower. However, look, my problem right now is if we do drop below this little hurdle, this 16,918 zone, then yes, my next target is the 16,000, this 767, or in other words, 16767 level, because I want to see if this is not going to end up being something like a also like a little head and shoulders pattern, you know, with the neckline being this for this territory. Let me actually just mark it for our future reference. I think that that would be a little bit more logical. So this is the one that I'm talking about. So initially, of course, yeah, if we do fall below the 16,918 zone, yes, I will go a little bit lower. I'll aim for this little target, but if that gets cleared, I mean, yes, of course, further declines are possible. However, if we do rebound from this little territory here, then maybe we'll form another little head and shoulders pattern. So head and shoulders pattern within a possible you know, within the head of this possible head and shoulders pattern. So again, I'm like I said, I'm probably getting ahead of myself a little bit, but let's see if that's gonna work out or not. Just bear with me one moment, guys. Okay, so now then, the German index DAX. So we're seeing the futures pushing a little bit back to the upside. However, I'm not going to say anything else here. The same game plan is valid for me. I need to see a clearance of that territory right there. This one right here, the 17,000 mark, in order to go a little bit more to the upside. For the downside, a drop below the 16,811 zone here would be nice in order to consider a move lower. In terms of European data, now, in terms of European data, today we do have the HCOB Eurozone Manufacturing PMI coming out. So as you already, if you know, understood that we do have PMIs coming out this week. So, look, the Eurozone PMI currently is expected to come out as previous at 44.2. So basically, nicely sitting in contraction territory. But in general, I'm not really expecting many surprises, because normally the numbers do come out the same. I mean, as expected. However, if they suddenly deviate a lot from the initial forecast, then well, expect some movement in the euro or the German index. So that's my simple game plan on the German DAX here. So I'm just playing the waiting game right now. I'm waiting to see what's going to trigger the you know, the index here. Will it be just a general global thing, or actually something European related? But at the moment, I mean, I don't see much European data coming out, so I think that it might just remain more subject to what's happening in the US and Asia. Now, the FTSE 100. So before I go into the technicals, in terms of economic data, we don't really have much British news coming out, British data sets coming out this week. So apart from this one, where is that? Okay, but that's not. Yeah, we also have the global UK services PMI. Okay, so that's gonna be on Friday. Let me just double check, confirm. Yep, I think that, yeah, that's, no, sorry, that's on Thursday. The UK services PMI coming out, and that's kind of it. Basically, that's construction on Friday, construction PMI. But the services is going to be the more important one, because again, I can't remember how much, is 80% that you know, UK economy consists of the service sector. So it's like this, that's the main driver of the UK economy. So of course that's very important to see that number, the services PMI number, above 50. However, if it starts falling below 50, then well, that's not good. Now, from the technical perspective, so far everything's working out according to the plan. We are seeing some nice movement here. I mean, we're seeing still the index trading above the 7,724.34 area. I talked about this and I said that as long as we remain above it, then yes, my next target is the 7,810 territory right here, marked by the highest point of September. So, yeah, look, nothing else. I'm just gonna target that, and that's what I'm gonna stick to. For the downside, I need to see a drop below that little area, and then yes, we will take it from there. Now, let me just jump into US dollar, guys, very quickly. So, yep, this one is trying to make its way back up, okay, which is fine, absolutely. In order to go to the upside, look, I mean, I talked about this, and let me just check something here very quickly. Yeah, so in order to go higher, yes, one of the criteria has been met already. So we did push back up to the 101.07 territory. I talked about this, and I said that if we do clear it, I will go a little bit higher. My next target will be this area between the 101.5560 levels, and that's what I'm going to be aiming for initially, and then we'll go from there. So good potential target here. Let's see if we can reach this this downside line. Now, if we can, great. Okay, I mean, if we can break that, wonderful. More buyers here could join in. Now, in terms of the downside, a drop below the 100.32 territory right here could do the trick. Forthcoming lower low will be confirmed, and then yes, we will just kind of take it from there. But again, at this point, I'm kind of leaning for a slightly larger correction here to the upside on the US dollar index. So as long as it remains above this 101.07 territory, let's jump into gold. Gold is an animal. I mean, it just cannot give up. Or should say the bulls are not giving up here. And we did remain above this upside line. We did drift lower on Friday before the close of the market, and but yeah, we held above this short-term upside support line drawn from the low of the 17th of December. So yes, it is somewhat of a bullish indication. However, for me, bullishness will be from this 2090 zone at this point, because if we get a nice break above it, yes, more buyers here could join in, and we could start aiming for that 2100 level, 2110, 20, 30, and maybe even going all the way back to the all-time high. In general, I am kind of forecasting kind of a 2200, 2300 this year. Let me just double check something here as well on our website. Okay, so long story short, at the moment, what can I say? At the moment, this is the situation. This is my game plan. I mean, I need to see a pop above this area in order to go higher. At this point, while we remain in here, I'm not really touching it because, again, look, it still has a chance to reverse back down. However, from the downside, I need to see a break of this little short-term tentative upside support line drawn from the low of the 17th of December. If I can get that, great. I'll go a little bit to the downside. Silver is popping back up, or trying to climb here, and it's back above the 38.2 now. Okay, look, it's fine, it's absolutely great. The only thing is that for now, my upside scenario, no, it's not triggering my upside scenario. My upside scenario is somewhere from around here, roughly from the 61.80 zone, because then a forthcoming higher high will be confirmed. But all this here, I'll leave it. I'll allow it to move sideways here. I'll allow it to bounce around. But yeah, I'm not really touching it anywhere around here. If it falls again below this 38.2% retracement on the Fibonacci, then yeah, great. I will consider a move lower. Now then, jumping into oil. Oil is a mess. Oil is a mess because, look, it violated my upper side of the falling channel, okay? But then I said, look, if we remain inside the channel, there is a good chance for this one to drift to the downside. And, well, so far, we started pushing back up. You know what I need to do on this chart? I need to get rid of everything. I think that's logical. I think that's going to make sense. So remove all the drawings and let's have a fresh look. New year, new look. Look, for now, I'll keep it short and simple, basically. So on Friday we drifted lower. Yes, we found good support around here. Yep, near the 71.25 zone, and then we rebounded. Now, in order for me to go lower, a drop below that little territory would be required. So if until I see that, I'm not really touching the downside scenario. So, and then if we do drop below this hurdle, then yes, I will target the lowest point of December, near the 67.71 zone, and then we'll go from there. For the upside, I need to see a push above, somewhere above this territory. Actually, it's like ideally maybe this level, the 76.18, but I think that maybe some of you are looking at something like that, the 75.66 territory. But look, I think it's even, we could do even simpler, more simple. We could wait for a pop above the 50-day EMA, because so far this EMA is providing good resistance, and it's acting as a good area of resistance. Yes, so that means that we rather stick to the idea of the 50-day EMA, and if we do push above it and stay above it, then yes, I will aim a little bit higher. Let's jump in natural gas, guys. There we go, drifting back down, but eventually we had a little pop here. We did push above the 2.62 territory. We kind of initially were staying above it, and then we started falling apart and moving back down. So look, not everything is that bad for the bulls here, because it's the beginning of the day, and we still have, like, the whole European session to go through. So today, of course, not everybody's working. However, however, natural gas is the one that is trading right now, and we still have European session to go through and US session to go through. So long story short, for now, keeping an eye on that 2.62 territory, and if we do climb back above it, then yes, I will consider a move back up. So excuse me very much. Sorry, my throat today is killing me. Now, jumping into sugar very quickly, guys. So one of those commodities that I really like to look at, and look how well it played out. And I talked about this last week. I said to look, my target is the 22 area, or this 21.89 zone. Boom! Look at the fantastic touch of that area. Just by one tick, we failed to reach that area. However, I mean, I don't know. It's just amazing. So we tested that area, and look at this, drifted back down. So not saying that I'm getting not saying that I'm getting very excited with the downside. No, my downside will come on a break below this territory, below this little hurdle, this 19 what is it? No, sorry, the psychological 20. Yep, the psychological 20 zone. If we do drop below it, yep, I'll go lower. Wheat, let's quickly talk about that one. Wheat is still stuck, so I'm still watching this barrier, the 649 zone, in order to go higher. So if we do get that push above that area, yes, I will go further. I'll go further north. For the downside, a drop below the 596 territory right here is required. While we remain here, I'm just observing the price action. Let's jump into Bitcoin. Everybody's happy to see Bitcoin, and everybody's like, every time, every year around New Year's time, everybody's kind of all the time remembering the first, that big rally everybody was, everybody saw, everybody was talking about back in the day, back in 2016 or something like that, I think. Just let me just jump into maybe trading views chart or something. BTC, USD. Where's that trading view? Crypto. There we go. So I'm talking about this rally, this one right here. I mean, in comparison to this is just like a, nothing. But at that time, it was like, wow, it was like went from like 5, 6,000, 7,000 straight to 20,000. That was like crazy. And then we had another rally, after COVID, during COVID time. So and then in 2021 as well, we hit the all-time high. Now look, of course, everybody's watching right now, and are also like expecting Bitcoin to go all the way towards that 100,000 zone. Okay, look, maybe it will go. I don't know, honestly, nobody knows. But whoever says that like they know for sure, I mean, okay, great. I mean, you can foresee the future. I cannot for sure. I just go with what I see. So I just assume, I try to apply some sort of logic, and I try to kind of see where the next potential target could be. And in this case, right now, I am leaning towards the upside as long as we remain above the 44,780 zone, somewhere around here, which is the highest point of December. If we stay above that area, then yes, my next target is the 48,235 level, marked by the highest point of March of 2022, guys. Ethereum, and for the downside, yes, a break of this upside line is needed. So until I get that break below this upside line, I'm not really examining the downside, only as like a little correction before another possible leg of buying. Ethereum. So with the Ethereum, it's a little bit trickier, a little bit more tricky. We are struggling with this 2,400 territory. I mean, we need that clearance of this 2,407 zone in order to go higher. At the moment, I'm not really getting that. So at the moment, I'm just observing the price action. In terms of the downside, again, the same story. A drop below this upside line is required. If we can get that, great. More sellers here could join in. BitcoinCash, we're flirting with this upper side of the range. I talked about this, guys, and I said to look, we need that clearance. We need to see the body of the daily candle staying above that area. If we can get that, then yes, great, higher levels could be met. Now, in terms of the downside, I need to see a drop at least below this little hurdle, this 245 territory, and then we could consider a larger move to the downside within the range. So that's the kind of the game plan. Let's see if that's going to work out or not. Let's see if that's going to work out or not. So at the moment, but at the moment, that is the situation. Look, another thing to consider, by the way, is like for all those bulls out there, that if the US dollar suddenly picks up the pace rapidly, then be careful. I mean, we could see the cryptos actually maybe not moving that much to the upside. So just kind of let you know. Litecoin. So Litecoin, guys, jumping into that one. So we remained above the 200-day EMA, and as long as we stay above that 200-day EMA, I'm going to continue targeting the upside. And look, also we are within this rising channel, so in a way, everything's kind of pointing more towards the upside. For the downside, I need to see a break below the lower side of the rising channel, and then we could go from there. AUDUSD. So there we go. We are seeing a bit of a correction here now, and as I said to you, that US dollar picked up the pace. So maybe it's not the weakness of the Australian dollar; it's more of the strength of the US dollar. So another thing that I mentioned was that as long as we remain above the 0.6820 21 22 territory right here, then yes, my next target is the 0.6895 or the 0.69 territory itself. So however, if we do fall and stay below the 0.6795 territory right here, then yes, I will consider a move lower, a move towards this upside support line drawn from the low, the 26th of October, and then we will take it from there. Let's see. Of course, let's see. We are, like I said, in this the first week of January, the first week of this year. So hey, let's see what's gonna happen, what could happen, and at the moment, I'm taking everything cautiously, carefully, because look, we are very interesting at a very interesting spot. Stock market is at all-time highs. If the stock market starts reversing sharply to the downside, we could see this pair moving lower as well. AUDNZD. There we go. We're getting my pop here. Fantastic. I'm so happy about this one because I talked about this and I said to you, look, in order for me to go higher, I need to see a push above that 200-day EMA. And basically, this would place the pair above all my EMAs on my daily chart. And so far, yes, we're seeing some nice buying action, and as long as we stay above this territory, above those EMAs, then yes, I will continue aiming to the upside. My next target is the 1.0862, and then I'll go from there because I do have some other levels here which could potentially play out. However, some of them might be a little bit on the tentative side. US dollar against the Japanese yen. So we're seeing some retracement. However, we're still near this 141.55 territory. Now we're slightly below it, of course. And that, of course, for me, that's an indication of some bearishness. But given that we're still very close to this little hurdle, that's why I'm kind of, taking a pause a little bit, because if I want to go to the downside, a drop below the lowest point of December near the 140.25 territory is required. So look, from the mid-November when we reversed nicely to the downside here, I mean, everybody was like sounding the alarm that, oh my God, 152. I said that, look, the Japanese bank, the central bank of Japan, will still have to intervene at some point. I mean, if they cannot allow this to go crazy to the upside for the yen to devalue that much, and maybe that's what they did, secretly, quietly, and we saw the pair drifting lower, and we also saw some big hedge funds piling up on the yen, on the Japanese yen, and they were just quickly buying it, and I think that now they're in a good profit. So look, I mean, jumping from 151 to 141, congratulations, wonderful. US dollar against the Canadian dollar. So, okay, what's the situation here? It's we're pushing back up. We climbed back with one of my levels here, the 1.3219. I talked about this. This was previously seen as a good area of support, then resistance, and we cleared it and we stayed above it. So I'm kind of leaning a little bit more towards the upside, to be honest. I mean, for a larger correction to the upside. But look, we have also this potential idea of Fibonacci. So you can see that the this 23.6 is somewhere around this 1.3282 level. But I have this target here on my chart. However, I think that I need to get rid of it, but it beautifully aligns it's a midpoint between the 23.6 and the 38.2. Now, sometimes these do work out, but I think that I need to put something else here on the chart. I think maybe no, that's just trying to that's just trying to see something where it's not. Actually, this is quite an interesting level that I just marked. So that's the inside swing low of the 8th of July of this year, 2023. It also acted as a good area of resistance recently, as you can see, and yeah. So if you're looking for some higher levels, then wait maybe for a pop above that 1.3266 zone, and then we will go from there. US dollar against the Swiss franc. Let's have a look at that one. Beautiful reversal. So look, I talked about this, and I said too that if we do climb back and stay above the 0.8457, then yes, great. I will consider maybe a bit of a larger correction to the upside, because at the same time we can also draw Fibonacci. So we climbed above the 23.6. We're now testing that 0.8457, and my next target is right now the 38.2, and then we'll take it from there. In terms of the downside, well, a break below this hurdle here, the this lowest point of December, which is around the 0.8332 territory. If we clear that, a forthcoming lower low will be confirmed, and potentially this could attract more sellers into the game. Let's jump into GBPUSD, guys, very quickly. So yes, we drifted back down. We remained below the 1.28 territory. So I need to see that push above that 1.28 zone in order to go higher. If we stay above this upside line, yes, okay, there is still a chance basically for the bulls to jump in. However, I want to be a little bit more conservative right now with this situation. I want to wait for a push above the 1.28 zone first in order to go higher. For the downside, a drop below this upside line here is required, and if we get that drop below this upside line, then yes, potentially there could be a change. Well, not potentially, there will be a change in the direction of the trend. Because the trend will get violated. However, and this potentially could attract the seller. So a change in the direction of the trend, yes, in this case, the change in direction of the uptrend, then yes, it could attract more sellers into the game. GBPCHF, so beautiful rebound. Look at this, how well this area played out. So this 1.0720, we broke below it. I said that I'm targeting the 1.0638 zone, 39, something like that. And boom, it went nicely to the downside, tested that, rebounded from it, and pushed back up. So we stayed above this territory between the 1.0720 and 35 levels. And yeah, now at this point, I think I need to get rid of some of these arrows. So look, if we do fall again below the 1.0720, then yes, I will consider a move lower. However, for the upside right now, I need to see a push over the 1.0783 in order to go a little bit more to the upside. And then here I will aim for this 1.0845 and maybe then the 1.0890 level right there. EURCAD is, look, this is something that I haven't picked up for quite a while, and I think a removal of all the drawings is needed. Because why I wanted to show you this one is that we are currently oscillating around around my EMAs on the daily chart. So that means that the market is kind of undecided what it wants to do further. Something tells me that there could be some downside movement here, because look, if this is kind of a little consolidation, so before entering that little consolidation, we kind of, we started ranging a little bit here, and the prevailing trend was to the downside. So according to the TA rules, this kind of tends to break to the downside. It kind of tends to be like a little pause before, it's like a pause of the continuation pattern. Sorry, this is a continuation pattern, so it's like a little pause before a further decline. So in this case, yes, downside scenario is the one that I'm leaning a little bit more to, but confirmation break for me is required. Drop below the 1.4551 territory right here is needed, and then we will go from there. We will go towards the this little territory right here, the 1.4330 maybe, and then we'll take it from there. For the upside, excuse me. Now for the upside, guys. Ideally, I would like to see a move above this territory, 1.4765. However, I think we could already start looking at some higher levels slowly if we do push back above the 50-day EMA and all the EMAs basically on my daily chart here. And at the moment, yes, I mean at the moment that's the situation. So long story short, I have nothing else to add here. Just I'm waiting for some clarity, and the moment I'm watching this 1.4551 territory on the downside, and the my EMAs, the top one here, if we do clear all of them, then yes, I will get a little bit more excited with the upside. However, there are some certain barriers here to still go through. And finally, EURUSD, guys. So after a beautiful kind of test of this area near the 1.1150, we reversed back down and started drifting lower. And yep, at the moment, I would say that we are drifting nicely to the downside, and we are targeting this 1.10 zone again, 1.1009, something like that. Could be a nice good target. But look, let's not forget that we are above the downside line, this broken downside line, which is a little bit on the tentative side. We're also still above this upside line, so in a way, any move lower is still classed as a temporary correction before another possible leg of buying, as long as we stay above this upside line. However, if we start breaking, no, let me get rid of this. If we start breaking, yeah, you just grab the arrow, start breaking the upside line and we fall below it, then yep, what's happening today? Come on, there we go. Yes, so if you start breaking the upside line, then yes, of course, this could open the door towards some lower levels. And yeah, at this point, this move lower is, look, I think that it's better just to kind of leave it and wait for a reversal to the upside. If you're looking for some higher levels for the downside, I think that it's better maybe to wait for, maybe, like I said, yeah, a little reversal back up, and then let's say if it fails to go back above the 1.1065 territory, then you know another decline here could be possible, and then we could establish this potential breakout point. So yeah, at the moment I am looking at this 1.1009 territory. If that gets cleared, yes, my next target is this upside support line drawn from the low the 1st of November, and then we'll take it from there. Now, yeah, look, that's the game plan for now with the euro dollar. If you want to be very conservative in terms of the upside, then you can wait for a pop-up of the 1.1150 just to be a little bit more on the safe side. However, look, I will start maybe looking at some higher levels again if we do climb back over the 1.1065, but of course I will be very careful and cautious, just because maybe, you know, it could find a resistance somewhere here and then reverse back down. So just kind of yeah, out of precaution basically. So good potential target, but let's be careful. So guys, that's it for this session. Thank you very much for tuning in, and again, apologies for my voice and for these little interruptions. Yes, I mean, not feeling my best. I have a cold. So yeah, guys, I hope you'll forgive me, but please tune in tomorrow morning, as always, 6 o'clock GMT time, or just, you know, have a look at the recorded session. So yes, guys, thank you very much. And just to let you know as well that yes, the upcoming webinar which we have which we have with Mr. Jindao Tai, so that's going to be on the 9th of January. So yes, guys, please tune in, or you'll be able to watch the recorded session as well. But yeah, I hope you'll enjoy it, but more details to come later a little bit. But yeah, something like interesting, something new for, so let's see how that's going to work. Hopefully well. But yeah, Jindao Tai is a very respected presenter as well, and he also runs his shows. So I think that yes, you will find some useful, you'll hear some useful stuff. So, but that's it for me right now for today, guys. Just yes, as always, there is a disclaimer at the end, but thank you very much, and I'll see you tomorrow morning, 6 o'clock GMT time. Thank you very much, and bye-bye, guys.
Hey there, thank you very much for watching this one till the end. I really appreciate that. So, like this video, we speculate your next mouse movement will be towards the subscribe button.